Hi guys, good afternoon from London. Just gone 12 o'clock here, Tuesday 19th of March. I'm going to have a quick look over the calendar to begin with, and then a couple of the charts where we're trading and potential opportunities for the afternoon and session ahead. This morning in the UK we had some data out of the UK I should say, which is slightly best employment figures, best for a very long time, going back to the 70s, and the weekly earnings were also a touch better than expected, which saw the pound push higher, albeit this release was 13 minutes earlier than expected. Probably a bit of an error on the statisticians placing that out. Also, so the ZEW numbers out of Germany and Europe were better than expected, and we saw a limited reaction there. However, of course, with the Fed tomorrow, and then the Bank of England on Thursday, central banks taking over the forefront of potential bigger moves, I would say. So today, currency-wise, wouldn't expect to see the biggest moves unless we have some new headlines out. I mean, the pound is sitting quite it's sitting at a pretty important level. You can see going back to September last year, and even before that, July and June, and then as an area of support back in the beginning of June, we've failed to really push and break above this quite a few times. So definitely one to keep an eye on the futures there at 133.50. An extension above that probably needs another headline or so. But I think if we can confirm a break above that, maybe a bit of dollar weakness to help with that, the only way is up, and then I'd be looking at really just getting to 135 in a much quicker fashion. Euro, worth keeping an eye on, actually literally where we're trading now. This trend channel that's been in play for the whole of 2019, you can see has had multiple tests, and we're just coming up to test the top end of that now, breaking through yesterday's high as we speak. Worth obviously keeping an eye on how that reacts around the previous low that we had on the 1st of March before that breakdown as well. So quite an important area. Elsewhere, stocks which have continued to push on. We talked about the low of the 8th being a key level, very much still the case. About 15 points away, cash open coming up to keep an eye on. If we could get a bit of a retracement, then I'd be looking around this sort of area, 28.44 to 43 as a good level of potential support. Oil API numbers out this evening, we continue to push higher, and on this daily chart you can see just the importance of where we're trading, or near where we're trading now. The 50% from the October high that we had last year to the Boxing Day or just before Boxing Day low, an important level to keep an eye on. 50% did. The 3.82 acted very well. So wouldn't be too surprised to see a bit of a short-term resistance point here. The break of that $60, then we could get a further extension to the upside. Bit of a weaker dollar today, which has helped push gold above its resistance. Came back down to retest that and break through. However, you have got quite a bit of noise from the 13th and 14th of this month, and today's R2. For any short in gold, and this goes for the more medium term, I'd really want these sort of lower bound trend lines to break, and then perhaps sentiment can start to change. So just having a quick flick back to the calendar, going through the afternoon, we've got some durable goods numbers out, 2 p.m. UK time, 9 US, factory orders at the same time. Before that, API coming 8:30 UK or 3:30 US time.